The big question is, what's the return on my investment going to be? I'm going to give you $1 million. I want to make $5 million back. Typically, as I understand it from most investors, they want a rate of return of about 30 to 40%. And they're going to have to hold your investment for probably 5, maybe 7 years. So thinking about that, they want 30 to 40% per year on their money. So if they give you $100,000 today, they want that $100,000 to be worth about $130,000, $140,000 next year. Compound that, they want that to be worth $130,000 plus 40% the second year. This is going to add up over 5 years. So you need to demonstrate to them how this thing is going to return this investment. Now, you aren't going to show them the model. You're not going to promise them, hey, I'm going to give you a certain return on investment, because now you're into a risky place of promising them a certain return. What you can do is work around, this comes back to your demand model, showing that if this business does what management projects it to do, which means you're going to go from 0 to $50 million in 5 years, let's say, with a certain profit margin, based on, this is where the investor can do the math in their head. If they bought 10% of the company, this business is worth $50 million in 5 years, and there's a certain multiple on that business where it's worth, 5 times revenue, which means now the business is worth $250 million and they own 10% of it. In the back of their mind, they can say, wow, my investment of $1 million is now worth $25 million in 5 years. You see how that math works? Might watch it, rewind this and play this again. But the idea is you want to know what the return on investment is. So we have spreadsheets in there to help you understand it. So when you face an investor, you can look them in the eye, knowing that based on your projections, which you believe are reasonable, this makes a heck of a good deal for investors. So you can look at an investor and say, I've got a really good deal in this thing. And you know the investor's going to make money on this deal if it plays out the way you plan it to. And you know you're going to make a fortune on this business when it plays out the way you expect it to. Because part of the problem is you think, well, why do I want to bring in investors? This is just going to be a hassle for me. I want to make money in this business, but you can't get there from here without the investor's money. So the investor's got to make a lot of money because they're taking a risk on you and your business. They could put a new roof on their house or go to Europe or do any number of a zillion other things or invest in the stock market. It turns out that the best investment these days is investing in a small business, and likely a startup like yours. So the idea is you're showing, and our models help you understand what this deal is. So you can look at an investor and say, look, 10% of the business, this business happens down the road, they can get an idea of what their investment's going to be worth. And that's really how they'll triangulate this based on your financial models.